Hey, what's up guys? John here. We just left the most incredible seller's market of all time, and the housing market is adjusting to this. Mortgage applications are at the lowest level since 1996, a 27-year period, and rates are going to continue to rise, and the small amount of buyers that are out there right now are going to get even smaller. We're going to start to see a situation in this economy in which we've never seen before, and I'm going to break it down for you clearly because the facts are astonishing. Please hit the like button. When you hit the like button, YouTube will share this content to educate other people about what's really going on in the U.S. economy. And today's video is sponsored by NordVPN, but more on that in just a little bit. Take a look at this. Mortgage demand drops to a 27-year low as interest rates pull back. After rising sharply for several weeks, mortgage interest rates pulled back slightly last week, but not enough to revive mortgage demand. Total mortgage application volume fell 2.9% last week compared with the previous week, according to Mortgage Banker Association's seasonally adjusted index. The average contract interest rate for 30-year fixed with conforming loan balances $726,000 or less decreased to 7.2% to 7.3%, with falling points from 0.69 to 0.73, including the origination fee for loans with 20% down. Mortgage applications declined to the lowest level since 1996, despite a drop in mortgage rates, said Joe Can, an MBA economist. Rates remained more than a full percentage point higher than a year ago, despite mixed data on health of the economy and signs of a cooling job market. Applications to refinance homes, which are most sensitive to weekly interest rates, fell 5% compared with the previous week and were 30% lower than a week before. The vast majority of borrowers today have loans with rates below 4%. Even with high rates of home equity, borrowers more are likely to take out second loans to pull cash out rather than lose their low interest rates through a cash out refi. Applications for mortgage to purchase home fell 2% for the week and were 28% lower than the same week a year ago. Prospective buyers remain on the sidelines due to low housing inventory and elevated mortgage rates. Mortgage rates turned higher again to start this week, with more economic data out the coming days to impact rates further. While they have moved to narrow range the past few weeks, 7% appears to be the new normal. I think 8% is going to be the new normal, at least in the short term, but it could potentially go higher. This has thrown cold water on home prices, which have been rising for much of the year, but which appear to be easing now yet again. So look at this just as a comparison. The average price to rent a single-family home, $2,395 per month, right? $2,395. That would be, on an 8% mortgage, right? 8% mortgage, you're looking at buying a property for $230,000. Where are you going to buy a home in America for $230,000? Nowhere. I mean, maybe a couple little pockets of maybe Detroit, a couple little pockets of South Jersey, maybe Camden, some of these markets. Sure, maybe you could find a property for $100,000 or $200,000. But in most areas in America, you're looking at $450,000, $500,000, $600,000. Hey there, economic enthusiast. As we navigate the universe of global economics, have you thought about the global cyber threats that lurk in the digital space? Before we dive deeper, a quick shout out to NordVPN for sponsoring today's video. If you want to ensure that your economic research is safe and secure, be sure to check out my unique link. In the world of economics, speed and security are paramount. NordVPN, the fastest out there, ensures that your online activities remain uninterrupted. With just one click, I'm shielded from cyber threats. And here's a fun perk for all the movie buffs out there. With NordVPN, I can access movies from all different countries, giving me insights into global entertainment markets and economic impact. From phishing scams impacting businesses and malware impacting economic databases, NordVPN provides a shield against these threats. And speaking of security, NordPass ensures that my passwords and economic data remain confidential. Plus, with the data breach scanner, I'm informed if my data is ever at risk. For all my fellow economic researchers and enthusiasts, it is crucial to protect your online presence. Join me in making our digital economic space safer. And if you're hesitant, remember, NordVPN is risk-free. They offer a 30-day money-back guarantee. So why wait? Dive into the world of secure economics. Get your exclusive NordVPN deal here. Stay safe and keep exploring the economic universe. To buy a $230,000 home with 6% down, $14,000 basically is a down payment, $2,300 $6 a month, basically, right? This does not factor in for the cost of being a homeowner, right? When you're a tenant, you don't have to deal with maintenance. You don't have to deal with the insurance continuing to rise. If you're a tenant, you could just basically bounce from one place to the next if you so chose, right? You have that flexibility. But when you're looking at a $410,000 purchase price, right, and you're looking 8% down, 8% mortgage, 6% down on a $410,000 property, you're looking at $3,900 a month. The difference between both being a renter and a homeowner today is $18,000 per year, right? Or to simplify it, $1,552 per month is the difference between being a renter and an owner. How many people have an extra $1,500 a month? Not that many, right? The average American has less than $400 in the bank. So when you start to add this up, it's going to be a very, very big problem for the labor market. And this is what many people don't realize about these low interest rates that a lot of people, locked in 2020 and 2021. Sure, it's an incredible rate. If you could hold on to it, it's a gift, right? Because inflation is going to continue to run, I believe, throughout 2024 and 2025. I think inflation is going to, the problem we haven't even seen just yet. And so as inflation continues to rise, if you can borrow money for a fraction of what inflation is, it's free money. But what happens when the labor market really contracts, massive layoffs continue to ensue, and this affordability crisis continues to get worse? 40% of Americans took out a home loan, 40% of all properties in America, 2020 to 2021, locking in these incredible rates. How many of these people can hold on to these properties when things start to turn? That's the big question. I believe the number is going to be far less people are going to be able to hold on than many people originally anticipated. A lot of people that bought these properties thought, we're going back to normal. Does this feel like normal? I don't think so. I don't think so at all. I think the new normal is going to be chaos and uncertainty. That's what I think the new normal is. And so if there's a small pool of buyers and interest rates continue to rise in the short term, like Jerome Powell is saying, it's right here, Federal Reserve Chair Jerome Powell hints at more bad news for borrowers, right? Fed carefully, higher rates may be needed. Move in carefully, right? So inflation fight is not over. So they're going to continue to increase interest rates. There's going to be a small pool of buyers. There's going to be a lot more sellers that are going to be much more desperate to unload these properties, and they're going to look to try to save this $1,500 a month in revenue that they could potentially save, right? I actually think that rents are going to continue to go down because you're going to have this large pool of homeowners that don't have equity. They have a great interest rate, but they don't have equity, and they want to just hold on for dear life. What are they going to do? They're going to rent out their homes. You have 1.8 million housing units under construction right now that were built to sell. And these properties, they thought they had buyers at 3% mortgage rates. Now, they don't have any buyers, right? Mortgage applications at a low of 27 years, 1996. So you start to add this up, it's going to be all built for rent. There's just going to be tons and tons and tons of rental inventory. And so what happens when you have tons of rental inventory? The prices are going to go down, right? Prices are going to continue to go down. And so people are going to be more incentivized to rent. And so when you look at all this, I think that owning a home is what everyone should strive for. At least, if you have goals of being a homeowner or being an investor. But looking at the writing on the wall, if you want to be an investor, there's going to be a lot less competition for you. There's going to be a lot more sellers out there desperate to sell as this job market starts to turn. $2 trillion in corporate debt is going to be coming due in the next 24 months. You're going to start seeing tons and tons of layoffs, which are going to have a big impact on this housing market. So you start to look at this, not even mentioning commercial real estate, right? The Wall Street Journal came out today. Real estate doom loop threatens America's banks. Regional bank exposure to commercial real estate is more substantial than it appears. So you start to look at some of these headlines. San Francisco real estate reset is already happening, right? 17 U.S. cities attracting real estate investors for rent price increases, right? The people that are going to be investing are going to be the people that have cash, people that have great credit, people that just have their stuff together. Because banks, as they start suffering these big losses, like what you're seeing here, this thing hasn't even started yet. $1 trillion in commercial real estate loans has to get refinanced inside of the next 12 months, $1 trillion. And by 2027, $2.7 trillion has to get refinanced. That's one out of every single commercial property in America. And when you're thinking commercial property, don't just think of a big office building or a 6-unit apartment building or a 600-unit apartment building. Think industrial real estate. Think all commercial real estate. Everything that has a commercial loan. 1 in 10 of those properties in America has to get refinanced, basically going back to the bank to get a new appraisal to hopefully be able to get money to keep their deal. Otherwise, they have to give the keys back. So problems are definitely coming in this U.S. housing market. And I think there's going to be massive opportunity for smart and savvy, well-prepared individuals and investors over the coming couple years. But yeah, huge opportunities. And I think that you're going to see fortunes made. Carl Icahn, famous billionaire, he had this one saying, I'll never forget it. He said, the difference between a great investor and a bad investor. Great investors sell when everybody wants to buy, and they buy when everybody wants to sell. The last couple of years, everybody wanted to buy. The next couple of years, a lot of people are going to want to sell, and that's when you're going to want to get in. So drop below, hit the like button, add me on IG, and for more information on NordVPN, be sure to click the link below in the description of this video. I'll see you in the next one.